Joining us now is Wells Fargo Nvidia analyst Aaron Rakers. Aaron, great to see you. And what do you make of the price action in Nvidia losing steam here? Does that suggest to you that markets are losing a bit of confidence in the company's run rate?
Yeah, I mean, I don't think it's confidence. I think it's just the market, reflective of what was a very high bar going into this print. I mean, they delivered phenomenal results, beat revenue on a big guide upward for the July quarter by, I think it was about 23%. Beat the bottom line EBIT number by about 37%. So I don't think that anything's changed. I think it's just the expectations were high. I think we've got to digest a little bit. And, also we're seeing the stocks down about 2% this morning as well. And so I don't think anything's changed in the narrative in Nvidia. I think it's just the expectation.
Unlike a lot of companies, Nvidia is not dealing with a demand issue, right? But I wonder on the supply front, I mean, with demand increasing so much, is there something to be said about whether this demand can be met and whether Wall Street is overlooking an inventory issue over time?
Yeah, I think one of the things to consider there is that, that's a key focus for Nvidia and the emphasis on the fact that they can grow supply, not just this quarter, but sequentially over the next handful of quarters. If you look at some of the metrics they gave, right, inventory and purchase obligations were up 53% sequentially coming out of the July quarter. That's expected to continue to grow. And so they are clearly chasing demand. I think it's also important to note that, what I think showing up in Nvidia, right, is it's not a chip company, right? It's a platform story. They're selling systems that have 35,000 components in them. They're selling networking gear, which almost doubled year over year this last quarter. And I think we're at the early innings of seeing possibly even the software monetization as another leg to the growth story in Nvidia as we look forward.
Hey, Aaron, you go from 500 to 600, which is sort of like within the middle of the street. I just wonder if I can get you to pass judgment on some of the outsized targets out there, like the 800 to 1100s that we see. What are they getting wrong, if anything?
Yeah, so I mean, what we're trying to do is we're trying to stay realistic on the valuation. So our number at 600 is about 37 times our calendar 25 EPS estimate, which is about $16.20. So, we're trying to stay consistent there. The stock has traded historically over the last 3 years at about a 42 forward 12-month PE multiple. But you do see estimates. I was just looking at some of the consensus, right? You're punching above 20 bucks of earnings power looking into calendar 25. And we want to be conservative, but clearly the momentum's at the back of Nvidia, and we think that estimates can continue to move higher, and we'll see what happens with numbers as we move out over the next couple of quarters. But clearly it's an expectations game, and we think there's still upside momentum in the story.